Why the hell would we ever go back to the gold standard? And what would the price of gold have to be if we did? The Gold Standard Restoration Act is one of a few proposals in recent years. With sticky inflation stealing the ordinary American's purchasing power, buying gold and silver and gold investing has become more and more prominent. Would a return to the gold standard restore stability to monetary insanity? If so, what would that look like? In the meantime, what can ordinary citizens do to protect themselves? How can investments in scarce assets like gold and silver or decentralized assets like Bitcoin be used to counterbalance this constant erosion of our savings and purchasing power? When weighing the cost of living, inflation, fluctuating interest rates, and the ever-growing national debt, it becomes more and more challenging to know if you are meeting your retirement goals. If you think you may be falling behind, see the link in the video description to access the free Inflation Retirement Calculator to make sure that you are on track. Also, be sure to stay until the end of the video where we will give you 2 sound investment options, each with their own set of advantages. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from former Congressman, author, and activist Ron Paul, economist, White House advisor, and author Jim Rickards, and economist and investor Keith Weiner.
We've used gold as money historically. It works surprisingly well. The UK, when England ran the world's trade in the late 1890s, the system was so efficient that there was 160 tons of gold in London at the time of the peak of this gold standard. Today, the state of Nevada produces 166 tons. So it was very efficient. It worked very well.
It's not that gold's volatile, it's that the dollar's volatile. Here's the thing, I understand why sell-side analysts disparage gold because they're in the business of selling something other than gold. I understand why academic economists disparage gold because they want to run the world with paper money. If you have a kind word to say for gold, you're a Neanderthal, you're a throwback. It's one thing to make the case for gold, which I do, but you have to kind of knock down these arguments. Let's just take one. You can never have a gold standard because there's not enough gold to support world trade and finance. Look at the size of world trade and finance, look at the gold supply, clearly not enough gold. That's nonsense. There's always enough gold. It's just a question of price. Now, if you multiply it $1,200, yes, there's not enough gold. If you multiply it $10,000, there's plenty of gold. The point is, I'm not saying you'll have a gold standard tomorrow, but the point is, if you do have a gold standard, so what's the implied non-deflationary price of gold under a gold standard given the money supply and given world trade? The answer is $10,000. It's 8th grade math.
I was motivated by the breakdown of the gold standard in 1971. If anybody remembers the 70s, we had interest rates at 21%, inflation rate of 15%, and I thought the monetary issue was important because it is the monetary debasement that allows governments, federal governments, to spend more money than they have and they print it, then they can have a welfare warfare state and no responsibility. I am always delighted when so many young people are interested in this issue because many young people will be inheriting this problem and trying to sort it out. Believe me, the gold standard was invented a long, long time ago from the beginning of recorded history. 5,000 years ago, they used gold and silver. Biblically, gold and silver, real weights and measures, that's what they counted by. So this is not brand new. It's the governments and the people who seek power are always undermining the restraints placed on governments by honest money. It's so unfair not to have a standard of value. By not having this standard of value, which is so important, is sort of trying to build a building with a ruler that's always changing value.
And another one of these canards you hear is gold caused the Great Depression. We can't go back to a gold standard because gold caused the Great Depression. If we hadn't been on the gold standard, we could have got out of the Great Depression. That's why we can't go back to a gold standard because if we ever have another Great Depression, gold will tie our hands, etc. But Bernanke's own research, and that's why I brought it up with him, says that at no time during the Great Depression did gold act as a constraint on money supply. The law at the time, the money supply was not allowed to be more than 250% of gold at the market. It could be 2.5 times that. At no time was the money supply more than 100% of the gold. In other words, the Fed had the discretion to go up another 150% and never did. So gold never acted as a constraint on the money supply during the Great Depression. The chairman, I said, Mr. Chairman, I said, I've read your research and it looks like gold was not a constraint on the money supply in the Great Depression. Do I have that right? And he said, yes, you do. So in other words, here's Bernanke saying that's a canard, that it was failed discretionary monetary policy, not gold, but gold has got the blame. And so Bernanke and Krugman actually get it. My problem is the people who don't do the research, the people who don't understand the history. Right, but that's what you hear on television, that's what you hear from journalists, that's what you hear from bloggers, and that unfortunately is what a lot of investors, including a lot of very sophisticated investors, believe.
Gold is going to remain an important form of money, not the only, not the leading, not take over as the gold standard, which my company is working to do. That's our raison d'etre. And in order for this proposition to fail, I'm going to make the argument that two things would have to occur. Both gold would have to cease to be what it's been, how it's still behaving even today. Gold would have to change its behavior and do an abrupt U-turn. And either the failing dollar, which I think most of the people in this room agree is failing, would have to change its nature as well. And if gold or the dollar or Bitcoin doesn't change, then gold is going to continue to remain an important form of money in the 21st century. And so if you're thinking about this proposition, are these things going to change what they are? I would just conclude by saying the tiger does not change his stripes.
The US dollar may be the cleanest shirt in the fiat laundry basket and likely the last faith-based currency to sink. This buys time for the ordinary investor to build their own lifeboat. Whether you're building your own gold standard, silver standard, or crypto standard, there is no point in waiting for large institutions and governments to get their act together. Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. An often used criticism for holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows your total of gold ounces held. To learn more about Monetary Metals and their innovative investment products, see the link in the video description. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.